My name is Ron Feldman. I'm the Senior Vice President for Supervision, Regulation, and Credit here at the Federal Reserve Bank of Minneapolis. And today I'm going to be discussing banking conditions in 2011 in the 9th Federal Reserve District. And as a reminder, this district consists of the states of Montana, North and South Dakota, Minnesota, the Upper Peninsula of Michigan, and the western portion of Wisconsin. Before I talk about the conditions in 2011, let me give you a sense of where we've been. At the end of 2010, I made a forecast for conditions in 2011, and my sense was that we were going to see improvement, but it could be slow. So what actually happened in 2011? We did see improvement, but it varied by the geography where banks were located, and it also varied by the metric we're going to look at. And I should remind you that we're looking at just banks that are headquartered in the states in the 9th Federal Reserve District. So let's start with asset quality. Asset quality is a measure of whether borrowers are repaying their loans on time and in full. And here we saw steady improvement across 2011, as shown in this chart. What we're going to look at specifically are loans that are paying on time and in full relative to the financial resources that banks have to absorb the losses from those loans. And you can see both the median bank, that's the bank in the middle of all banks, and the average bank showed improvement in this measure. What about profitability, which is another important measure of banking conditions? Here you can see less improvement. There was sharp improvement in the beginning of the year, but after that it was a little more middling. This means that banks are now making still less money than they did before the crisis. Now, why is that? Well, it relates to our next chart, which is going to be looking at year-over-year loan growth. And you can see that while there was steady improvement in this measure across the district, it remains negative. That is, at the end of 2011, there were actually fewer loan balances on the books of banks than there were at the end of 2010. That means that banks are putting more of their funds into lower yielding investments like cash or securities. So in sum, there was improvement in banking conditions, but some of the measures remain far off where they are historically over the last decade. In particular, loan growth and profitability remain weak. The conditions of banks in the district don't only vary by measure, they also vary by geography. In general, North and South Dakota is going to have the strongest banking conditions, and Montana and Minnesota are going to have the weakest. Let's look at an example. Here we're going to look at the same measure of asset quality that I showed you before, but broken out by states. And what you can see is North Dakota and South Dakota have the strongest asset quality, better than the district as a whole, relative to Minnesota and Montana, which have weaker asset quality relative to the district as a whole. And you'd see a similar pattern for profitability and loan growth. Generally speaking, the Dakotas being the strongest, the other states in the district being weaker than the district overall. So in sum, banking conditions in 2011 had improvement, but it varied across measure and by geography. I'm also going to be doing a forecast for 2012 for banking conditions in a separate video. Thank you.